As we jump into today's market climate, one of the big debates among investors is this: which metal is safer right now, silver or gold? Traditionally, gold is the classic safe haven asset that people run to when markets get unstable, while silver mixes both safe haven and industrial demand. But in 2026, the usual story isn't playing out exactly how many expected. Let's break down what's happening in the world of precious metals, what recent price action and macro forces are telling us, and where silver and gold might head next based on the freshest data available. In March 2026, both gold and silver have been under pressure. According to the latest reports, gold is down around 15% in March, while silver has dropped even more, about 26%, coinciding with broader market stress, rising inflation fears, and a strengthening US dollar. That's a pretty stark move for metals traditionally seen as safe havens when uncertainty increases. Market watch. Most people expect that when geopolitical tensions rise, like the ongoing conflict involving the United States and Iran, gold and silver would rally as investors seek safety. But in reality, markets have responded differently. Gold prices have recently declined around 1% to $4,450 an ounce as traders reassess rate expectations amid inflation and a stronger dollar environment. Silver has also slid. Reuters. So why are metals falling when the world feels riskier? One big reason is that markets are influenced not just by geopolitical headlines, but also by liquidity and monetary policy expectations. Investors are selling bullion to raise cash or cover losses elsewhere, which can temporarily push prices lower even in times of stress. Reuters. Gold's historic role has always been about relative preservation of capital, not immunity from price moves. In other words, even safe havens can fall if markets need liquidity. A recent analysis from Reuters suggests that traditional safe haven assets like gold, treasuries, and some currencies didn't perform as expected during recent geopolitical tensions, and instead cash and money market instruments outperformed as investors sought security. Reuters. This brings us to the central question. Is gold still safer than silver right now? The answer isn't completely black and white. It depends on what type of safety you're talking about. First, consider gold. Gold's safe haven status is backed by a long history. Central banks around the world, such as China, India, and others, have been adding gold to their reserves at a strong pace in recent years, viewing gold as a reliable store of value outside volatile financial markets. This institutional demand provides a structural price support over the long term, even if prices wobble in the short term. Business today, Middle East. Gold's strength also comes from its consistent demand as a hedge against inflation and currency weakness. Many market observers had priced in potential rate cuts by the U.S. Federal Reserve to support gold. But as inflationary pressures and oil price dynamics pointed toward sustained elevated interest rates, gold's appeal weakened in the short run as higher real yields and a stronger dollar reduced the attractiveness of non-yielding assets. Market watch. Silver, on the other hand, plays a dual role. It has a safe haven component like gold, but it also has a significant industrial demand component. Silver is used heavily in solar panels, electric vehicles, electronics, and other tech sectors. This dual nature can make silver more volatile, meaning prices can swing more dramatically, but it also gives silver an extra layer of demand that gold doesn't have. Dykes money control. Historically, silver's price moves tend to be larger, both upward and downward, than gold's when markets shift. That means silver isn't necessarily safer in the sense of stability, but it can offer higher return potential when markets rally or when industrial growth accelerates. Some analysts note that silver has outpaced gold's percentage gains in recent years due to this dual demand mix, even hitting record highs during periods of strong momentum. Statista. But this volatility works both ways. Just like gold, silver has experienced sharp sell-offs in 2026, especially when markets shift toward liquidity and risk aversion. Sharp one-day drops have occurred in both metals as traders reevaluate positions and respond to macro news. Reddit. In periods of market stress where investors sell assets indiscriminately, even supposedly safe ones, both silver and gold can fall together. That happened during recent market events where rising real yields and a stronger dollar pressured precious metals broadly. Reuters. When you think about safety, it's helpful to think of risk tolerance and investment horizon. Gold is generally seen as the more stable of the two because it has less industrial demand weight and more central bank holdings globally, providing structural backing and long-standing hedge narrative. Silver, while still considered a hedge, carries more speculative and cyclical elements due to its industrial linkages. Money control. Silver's industrial demand can boost its price under certain conditions, especially if technology and renewable energy usage grow. But this also means silver's price is partially tied to the strength of the global economy. If economic growth slows sharply, industrial demand might weaken, potentially reducing silver's defensive appeal relative to gold. Business Today, Middle East. Another factor analysts look at is ETF flows and physical holdings. Gold ETFs are commonly used by investors to hedge portfolios and are often more liquid and larger in size compared to silver ETFs. When risk sentiment shifts, gold ETF flows tend to adjust more gradually, adding to gold's perception of being a steadier hedge. Silver ETF flows can be more sensitive and choppy, reflecting swings in both investment demand and industrial sentiment. The Economic Times. Let's talk about recent price trend context. In earlier parts of 2026, both gold and silver reached multi-year highs, driven by sustained geopolitical tensions and macro uncertainty, but both have since retraced quite sharply. This shift highlights a broader reality. Price action doesn't always align perfectly with the safe haven narrative in real time. Reuters. So what does this mean for you as an investor or trader right now? First, if your definition of safe means capital preservation and lower volatility over long periods, gold still often holds the edge, especially when held as a long-term hedge against systemic risk. It historically recovers and tends to smooth out volatility compared with other assets in diversified portfolios. The Motley Fool Canada, On the other hand, if you are looking at ton potential upside with acceptance of higher volatility, silver may appeal, especially because it's tied to sectors like renewable energy and technology that may grow in the coming years. This industrial link can provide a different kind of resilience compared with gold's purely financial hedge status. Invest. Looking ahead, most analysts agree that the trajectory of both metals will depend on several core macro factors. First, how the Federal Reserve's interest rate path unfolds. Second, the strength or weakness of the US dollar. And third, how geopolitical risk and inflation expectations evolve. Investing.com, India. If the Fed begins to cut rates sooner than markets currently expect, yielding lower yields and reducing the opportunity cost of holding non-yielding assets, both silver and gold could benefit. A weaker dollar in that scenario would likely boost precious metals broadly, making both more attractive as hedges. Silver might benefit more, given its leverage to industrial demand and sentiment shifts. Investing.com, India. But if interest rates stay elevated longer because inflation remains stubborn, or if economic conditions tighten further, we could see sustained pressure on both metals, with gold possibly outperforming silver due to its stronger safe haven status and institutional backing. This wouldn't mean silver loses its investment case. Rather, it would reflect slower demand growth or cautious investor positioning. Market Watch. Another important dynamic is global technology and industrial growth. Sectors like solar energy, electric vehicles, electronics, and data centers continue to push silver demand. While gold doesn't play a major role in these industries, silver's industrial demand story could provide additional long-term support even if short-term safe haven interest declines. Invest. In terms of raw price levels, analysts have proposed wide ranges reflecting different scenarios. Some forecasts suggest gold could revisit or exceed previous highs if safe haven demand returns strongly, especially if a wider crisis impacts global markets. Silver has been called potentially explosive in price if both industrial demand and macro hedge flows kick in together, though its volatility means big swings both up and down. Business Today, Middle East. So where does that leave us? If we looked at pure classical safety, gold remains the safer metal in most traditional portfolios, more stable, less influenced by industrial cycles, and backed by broader institutional demand such as central bank reserves. But silver's dual-use advantage makes it attractive for investors who believe in robust industrial growth alongside hedge demand, even if that means accepting bigger price swings. In conclusion, the question of which metal is safer right now depends on what type of safety you value. For long-term hedge purity and lower volatility in uncertain economic periods, gold still tends to hold the upper hand. But for those willing to take on more volatility for the chance of higher relative gains, supported by industrial demand and shifting macro forces, silver remains a compelling choice. So before choosing where to put your money, think about your time horizon, risk tolerance, and overall portfolio strategy. Precious metals can play different roles as hedges, diversifiers, or tactical trade assets, depending on the broader economic backdrop. If you found this analysis helpful, make sure to like this video, subscribe for more market breakdowns, and leave a comment with your thoughts on silver versus gold. Which one do you think will outperform in the coming months or years? If you want, I can also include price charts and talking points. Geek Jian for your video. Just let me know. https://www.marketwatch.com. Live coverage DUWSP 500 NASDAQ fall, oil prices, Brent crude, WTI rise, Iran, war, card, gold, silver adding to brutal declines in March, Gavi Eisen's BK6D02KT A0BG, UTM source ChatGPT.com, gold, silver adding to brutal declines in March, https://www.reuters.com. World, India, gold steady markets, assess Mideast ceasefire talks 2026-0326, UTM source, ChatGPT.com, gold slips as markets assess prospects of Iran ceasefire. https://www.reuters.com, markets, global markets, safe haven ROI column, PIX graphics 2026-03-24. UTM source, ChatGPT.com. It's time to rethink the safe haven asset. https businesstoday.me analysis, safe haven or speculative peak gold and silver outlook amidst 2026 Iran conflict. UTM source in ChatGPT.com, safe haven or speculative peak gold and silver outlook amidst 2026 Iran conflict. Business Today, Middle East. So https www.marketwatch.com, story, gold isn't your safe haven in this war. It just logged its biggest weekly drop in over 14 years. C99FE0, NOS, UTM source, ChatGPT.com. Gold isn't your safe haven in this war. It just logged its biggest weekly drop in over 14 years. https www.moneycontrol.com, news, business, personal finance. Does silver hold a safe haven potential? 1333961 RTML, UTM source, ChatGPT.com. Does silver hold a safe haven potential? This https www.statista.com, chart 35377, price trends for precious metals, gold, silver, and platinum, UTM source, ChatGPT.com, chart, safe haven assets, precious metals shine brighter than ever, Statista. https www.reddit.com, r, investing for beginners, comments, 1QR9WZ silver, just crashed hard today. Here's what, UTM source, ChatGPT.com, silver just crashed hard today. Here's what actually happened. No conspiracy. https economictimes.com, MF analysis, chalk gold silver ETFs fall up to 13 amid Middle East conflict. Should investors stay invested or cut exposure? Article show 2976728.cms. UTM source, ChatGPT.com, gold silver ETFs fall up to 13% since Mideast war. Should investors stay invested or cut exposure? 10 https www.fool.ca 2026-0202 safe havens under pressure. Can gold and silver still hedge your portfolio in 2026? UTM source, ChatGPT.com, safe havens under pressure. Can gold and silver still hedge your portfolio in 2026? The Motley Fool Canada, https www.invest.com, news, silver gold 2026 precious metal offers, stronger investment case 25112, UTM source, ChatGPT.com, silver versus gold in 2026, which precious metal offers the stronger investment case? 12 https ininvesting.com, analysis, gold silver outlook shifts as US data and safe haven demand drive markets 2006-34890, UTM source, ChatGPT.com, gold silver outlook shifts as US data and safe haven demand drive markets, investing.com, India.